Good day, ladies and gentlemen, and a very warm welcome to the Ashoka Buildcon Limited earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mangesh Badang from Nirmal Bang Equities. Thank you, and over to you, sir.
Hello, everyone, and thank you for attending the second quarter FY22 conference call of Ashoka Buildcon. We have with us today Mr. Satish Parakh, Managing Director, and Mr. Paresh Mehta, CFO of Ashoka Buildcon, along with the investor relations team of Stellar IR. Without further ado, I now hand over the call to Mr. Parakh for his opening remarks, and then we'll follow it up with the Q&A session. Thank you, and over to you, sir.
Thank you, Mangesh. Good afternoon, everyone. We would like to extend a warm welcome to everyone on our earnings call for the quarter ended September 30th, 2021. Along with me, I have Mr. Paresh Mehta, our Chief Financial Officer, on the call. Before I take you through the operational performance highlights, I would like to brief you on the industry updates. Infrastructure development has emerged as a top government priority in recent years, and the Prime Minister's unveiling of Gati Shakti plan on Independence Day adds to a new dimension to the entire implementation. This is a critical step towards India's goal of developing rupees 100 lakh crores of holistic infrastructure. The plan includes strengthening the national highway network. The plan seeks to add approximately 1 lakh kilometers of road network over the next 4 years, bringing the country's national road network approximately to 2 lakh kilometers. This will result in significant increase in the road and highway sector's awarding activity. The Gati Shakti plan seeks to integrate 16 ministries: roads and highways, railways, shipping, petroleum, gas, power, telecom, shipping, aviation, with the goal of assuring comprehensive planning and implementation of infrastructure projects. It would ensure more efficient utilization of resources, continued investment in new projects, and faster infrastructure construction, hence creating enormous possibilities for infrastructure sector as a whole. Let me now discuss the construction activity from April to October 22. Highway construction slowed to 4450 kilometers from 4956 kilometers in corresponding year last year. The pace of construction was slowed by the second wave of COVID-19, which was followed by a heavy monsoon season in the majority of the country, which put pressure on the execution activity during this period. The awarding activities also remained modest during this period, with projects totaling to 4913 kilometers, down from 577 kilometers in the previous year. We anticipate that execution will accelerate in the remaining period in order to meet the NHR's FY22 target of 40 kilometers per day. The awarding activity will also increase in order to meet the NHR's target of 6,000 kilometers of Bharatmala projects in fiscal 2022. Now coming to the company's performance. To begin with, allow me to provide you an update on the positive development of SBI Macquarie transaction. We were able to effectively renegotiate the terms of shareholders' agreement with SBI Macquarie, addressing the investor's exit from the proceeds of ACL. The commitment to the investor has been revised from 1526 crores to rupees 1100 crores, with a cap of 1200 crores under this new agreement. So SBI Macquarie shall be entitled to receive minimum aggregate consideration of 1100 crores in the event of an exit, plus an agreed interest component calculated from January 1, 2021 to December 31, 2021, subject to a cap of 100 crores. and thereafter an additional interest, if any, subject to receipt of interest from ACA asset sale proceeds. In conjunction with the BOT asset sale process, we previously entered into a SPA with IF and its subsidiaries to acquire 49% stake in Ashoka Highway Bhandara Limited. Recently, our subsidiary ACL has entered into share purchase agreement with Highway Concessions 1 Private Limited, HC1, for the acquisition of 49% of stake held in HC1 in Ashoka Highway Durg Limited, along with a zero interest shareholders loan for an aggregate consideration of rupees 5 crores. Following the completion of this transaction, the company and its subsidiary will own 100% of Ashoka Highway Durg Limited. The completion of the transaction is subject to the completion of customary condition precedent. With this, the company along with its subsidiaries will hold 100% stake in all 5 BOT projects and 1 annuity asset. This will aid the sales process. Now coming to our order book. We received orders worth 1869 crores during the quarter, which includes an order from Adani Road Transport Limited for the execution of civil and associated works on 6-lane national highway of NH19 from Panagarh to Kalsit in the state of West Bengal on EPC basis, as well as an order from National Highway and Infrastructure Development Corporation on the EPC basis for package 6 of NH29 in Assam. Also, we have received a solar park order for EHV substations from Reva Ultra Mega Solar Limited in Madhya Pradesh. With this, our total order book inflow stands at 3354 crores for the year to date. Our total order book as on September 30, 2021 stand at 11,883 crores. The order book excludes an order worth 139 crores received from Assam Power Distribution Company Limited. Including this, our order book stands at 12,222 crores. The breakup of the order book is as follows. Road sector and railway sector comprises of 8061 crores, which is 68% of our total order book. Among the road projects order book, HAM road projects are to the tune of 2813 crores, EPC projects are to the tune of 4455 crores, and railways is 794 crores. Power T&D and others account for around 1850 crores, which is approximately 16% of the total order book. The EPC building segments is around 1912 crores, which is 16% of our total order book, and CGD around 60 crores. Let me update you on the status of HAM projects. During the quarter, our Kharatunda Barwa Adda project achieved pre-COD on October 9. Provisional completion certificate have been awarded. With this, we have achieved COD of 3 HAM projects and expect to achieve COD of 3 more HAM projects in near future. Execution across all the HAM projects is proceeding well, except for Tumkur-Shimoga Package 4, where we have submitted FC proposal to NHI and expect appointed date very soon. In terms of equity investment, the total equity requirement of 10 HAM projects, including PIM, is about 1337 crores, of which we have already invested 942 crores as on September 2021. For the fiscal 2022 and 23, the incremental equity requirement is 158 crores and 141 crores respectively. That is all from my side. I would like now to hand over to Paresh Mehta to to present the financial performance of Q2 FY22.
Thank you, sir. Good afternoon, everyone. The result presentation and the press release for the quarter have been uploaded on the stock exchanges and on the company website too. I believe you all may have gone through the same. Now I would present the financial results for the quarter ended September 30th, 2021. Starting with the consolidated results, the total income for Q2 FY22 grew by 7.1% year-on-year to rupees 1,305 crores as compared to 1,218 crores in Q2 FY21. EBITDA stood at 448 crores in Q2 FY22 with a margin of 34.3%. Profit after tax is at 78 crores in Q2 FY22 with a PAT margin at 6%. Coming to the standalone numbers, the total income for Q2 FY22 stands at 976 crores as compared to 927 crores in corresponding quarter last fiscal, registering a growth of 5.3%. EBITDA for the quarter was at 165 crores and the EBITDA margin stood at 16.9%. The company reported profit after tax of 96 crores on Q2 FY22 with a margin percentage of 9.8%. During Q2 FY22, BOT division recorded a toll collection of 243 crores against 224 crores in Q2 FY21 and rupees 208 crores in Q1 FY22. Total consolidated debt as on September 30, 2021 is at 6,466 crores, of which project debt is 6,082 crores, including rupees 250 crores of NCDs at ACL level. The standalone debt is at 383 crores, which comprises of 160 crores of equipment loans and 223 crores of working capital loans. With this, we may now open the floor for questions and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and so thanks for the opportunity. So first question is, what is the status of progress on SBI Macquarie exit? I am asking about the sale process and the timeline. Is the December 21 is a fair timeline where you can achieve some part of sale process? And the related question is, why the valuation was revised downwards? Do we expect a lower amount? Is that the reason for the proceeds of the sale?
Hello. Yeah. So from a perspective of SBI Macquarie, as we have disclosed, the restructuring agreement has been done, where it is negotiated for giving them an exit at approximately 1,100 crores plus interest thereon up to 31st December 2021. In pursuance of that, we are in talks and for matured level of discussions with the potential investors to buy into SPVs which are BOT SPVs or annuity SPVs, and we do expect them to be closing in this year. The December deadline may be extended, but there is good visibility of getting the deal done before the year end.
And why the valuation? Why the exit valuation revised downwards? Is there any particular reason we are expecting a lower value for the sale proceeds?
This is more of a negotiation at between two investors. I mean, between the investor and the promoter. The value of what will be got from the sale of proceeds will be determined over a period of time. So it's not directly correlated. It's more from a perspective of how we can negotiate from the amount to be received by Macquarie.
Understood, sir. So what was the reason for participating in the round-the-clock tender for power by SECI? Are we looking to, enter into some power generation, sector?
No, there is no such tender. These are pure EPC works.
So there's some RTC tender, right, floated by SECI where we had participated. Is my understanding right?
No. We have just taken EPC contracts here.
Maybe I'll check offline, sir. So, yes, sir, coming back to the solar contract which you have right now, so given the fact that the model price have gone upwards, is there any risk to the margin, especially with the NTPC contract? And or is there any clause which will allow us to pass through the model prices?
Yeah, overall sector has suffered on module prices. So we are in discussion with NTPC as well as MNRE to find a solution to this situation. So entire industry is in discussion and we are hopeful of getting a good solution. As of now, there is no clause in the contract where it can give us relaxation.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead. Vibhor, your line is unmuted. Please go ahead with your questions.
Oh, I'm so sorry. I was on mute. Am I audible now?
Yes, you're audible.
Yeah. Hello, sir. Thanks for taking my question. So two questions from my side. One is on the execution front. Just wanted to check after the completion of Q2 and almost half of Q3, what would be our guidance of revenue for this full year and margins as well?
So execution point of view, most of the projects are delayed started. So we are now going to see most of the execution in Q4 and of course part of Q3. But overall guidance, which was 25%, will now go to around 20% up than the last year. Margins would remain in a similar range.
Okay, so execution-wise, we're expecting maybe 20% growth now as compared to 25% earlier.
Right.
Got it. So my second question was on again, sorry, harping that on the Macquarie deal again. So I think one of the clauses in the rearrangement in the negotiation of the press release that we had mentioned is that we have also entered into an agreement for an asset swap to provide an exit to SBI Macquarie. So just wanted to pick your brains on that. So basically, is it that we are kind of maybe finding it difficult for a buyer for all the projects or some of the projects, and is asset swap also a very likelihood outcome of this entire transaction in which we don't end up paying SBI Macquarie entire 1,200 crores, but instead maybe part cash and part of some projects or some stake in projects. So how is this entire thing likely to pan out given this new clause that we have inserted?
Okay. So from the timelines perspective, what SBI Macquarie has in mind, as per the negotiations in the agreement, we have presumed that definitely certain sale of assets will happen, and in case there is any delay in few of the assets not happening in time, they would probably swap into one of the assets, and then they would take an exit. So that is the idea behind a mix of cash and swap. They are typically eyeing for a cash deal only, full cash deal, but they have kept this option open. So in the perspective of exit, they would prefer to not swap and do a pure full cash deal. But the provision is embedded in the agreement.
And then, let's say, for example, hypothetically speaking, if there is the requirement of an asset swap, will that be 100% asset swap, or it could be that, okay, they take 40% stake or 50% stake in some project and rest remaining cash? Or will it be like, okay, cash plus complete stake in some other project? Is there any decision on that part or too early to call?
Generally, they would like to do 100% swap, but I think so in certain assets there would be option for they probably would like to take a majority stake and a mix of majority stake and cash.
Right, sir. And then lastly on that front, there is nothing in the pipeline on the sale of HAM projects, right? At this point of time, we are focusing only on the sale of BOT and annuity projects. and providing the exit to SBI Macquarie.
So HAM projects are also on the anvil, but they are probably at a later stage they will come up for sale because quite a few of assets are yet to achieve COD. Only two assets have achieved COD. So on the priority, definitely the BOT projects and the annuity projects are there, and the potential investors are also definitely looking at HAM projects.
Got it, sir. Okay, sir. Thank you so much for taking my questions. I'll get back in the queue if I have anything.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Vasudev from Edelweiss. Please go ahead.
Yeah, thank you for the opportunity, sir. So my first question is, what is the equity requirement for the CGD business and in the HAM project? And also if you can give the BOT portfolio debt amount.
So as far as the CGD business is concerned, we have already invested 67 crores, and based on the three GAs which we have, our total equity requirement is approximately 200 crores. So from that perspective, the requirement of the balance 130 crores will be coming post will start from 22-23. In 21-22 and almost sufficient part of 22-23, H1 of 2023, there would be no requirement of any equity in UEPL because we already invested and now we are drawing on debt funds for completing for executing the project.
Okay, sir. Thank you. And the equity requirements for the HAM projects and BOT portfolio debt?
So for the HAM projects, the equity requirement balance for 21-22 is approximately 158 crores, and for 22-23, 141 crores. This is based on the present existing balance projects which we have under HAM.
Okay, sir. And if you can give the BOT portfolio debt amount?
BOT portfolio will probably require approximately 40 to 50 crores of support on a yearly basis.
Okay, and what is the current debt that we have?
Current debt on
the BOT portfolio.
On the BOT portfolio, we have 3,356 crores. And on HAM projects, it's around 2,000 crores.
Okay, sir. And sir, on the ACL portfolio, what are the equity and the debt amounts, like the equity invested till date and the debt?
So debt is, there's only one debt on ACL's balance sheet, that is the 250 crores of NCD which we have raised in the last quarter. Otherwise, total equity which has been infused is around 2,650 crores, 2,700 crores approximately.
Okay, got it, sir. And sir, my next question is, what is the land status for the Tumkur-Shimoga Package 3 and Package 4, and also for the Memadar-Bannur-Kharar Corridor project? Hello? Yes, sir.
Yeah, just could you repeat your question?
I want to know the land status for the Tumkur-Shimoga Package 3 and Package 4, and also for the Memadpur-Bannur-Kharar Corridor project.
Okay. TS3, we have almost 87.85% of land available to us.
Okay.
And TS4 around 80.05% is available. So TS4 now they are in the process of giving appointed date.
Okay. And for that corridor project?
Which corridor?
Memadpur-Bannur-Kharar.
Punjab.
Yeah.
In Punjab, they are actually they have done 90% of 3G, and they are in process of doing 3H. 3H is getting a bit delayed because of the availability of manpower by the state, as now they've already gone into election mode. So 3H is getting delayed in this IT corridor project.
Okay. And sir, about the capex thing, so what is the capex that we've done in Q2 and what are we planning for the next half of the year?
CapEx.
Other than the equity requirement, capex at EB level is not very significant. It would be within a range of 20 to 25 crores.
Okay. Okay. Got it, sir. And lastly, sir, if you can give me the revenue breakup segment-wise for the second quarter.
So, for the second quarter, on the roads front, it is around 816 crores. On the power front, it is 38 crores. Railway front, it is 98 crores. CGD approximately 6 crores. And others, RMC would be 25 crores. And others around 10 crores. Yeah.
Okay, okay. And one last question, sir. What is the order intake that we are planning for the second half?
Order intake, we are looking at another 2,000 to 3,000 crores.
Okay, 2,000 to 3,000.
3,500 already we have done, so another 3,000 crores should be.
Okay, okay. Got it, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good afternoon, sir. Thanks for taking my question. So my first question would be on the outstanding in the power T&D business. So there were some data which was outstanding in the last quarter also. So what is the status as of now in the power T&D outstanding, sir, the receivables?
So on the power net position is approximately 130 crores. And anything else you want this front you wanted?
So you said that in the last time we had around 198 crore pending from Bihar, then Jharkhand around 136. Yeah, we also had around 250 crores.
Yeah, statewide. So on a gross basis, there are numbers. This is net basis, our net of advances and unearned WIP. If you want on a gross basis, power is 315 crores debtors, which includes regular receivables, hold amounts, retentions.
Okay. Any state-wise breakup possible as of now, or should I take it offline?
Yeah, we can take it offline, but let me just see. So on state, on Bihar, we have approximately, this is roads and power and railway. Bihar would be approximately 157 crores. Jharkhand would be 143 crores, which are major amounts.
143, okay.
So if you take it offline, if you want to.
I'll take it offline. No problem, sir. And sir, on the Tumkur-Shivamogga package 3, we have received appointed date. Plus package 4, you said that expect soon. So what about package 3? Have we received?
3 we have received, yes.
So what is the date, sir?
July. Some date of July.
July.
9th. Yeah.
Okay.
9th July is the date.
Okay. So on the balance sheet side, can you give us the number of mobilization, advance, outstanding, retention, and unbilled revenue as on September?
On the mobilization side, I'll give you the total number is 278 crores for roads as well as power, all inclusive.
And retention and unbilled?
Retention and unbilled would be approximately 338 crores in retention, and unbilled would be another 387 crores.
Yeah, unbilled around 387 crores. Okay. And sir, on the execution front, so as you said,
sorry, unbilled would be 460 crores.
460 crores, yeah. And sir, on the order inflow, as you said,
one second, let me just rectify. The unbilled WIP is 779 crores. I think so. I got.
That's pretty high. So you have the breakup for unbilled between power and roads, if possible?
So this majorly is in roads, because these are in certain cases they are milestone payments, so they will get released in this quarter.
So
Power, road EPC and road HAM. EPC, road and HAM is approximately 570 crores.
Okay, that is EPC plus HAM. Yeah. And sir, on the order inflow, as you said, we have received around 3,500 crore inflows. But sir, if you see with the announcement, it comes to more than almost like 4,800 to 5,000 crores, because we had received a Gujarat rail infra project, then again Maldives, which is around 1,000 crores, then this Ambala project, Punjab, 648 is gone. So I'm just confused, like your inflows has been good. So is there any cancellation of projects in the order inflow, or what is the status like?
No, numbers are absolutely correct. Whatever has been announced and whatever we are seeing are absolutely matching. There's no cancellation or nothing. Yeah.
So any progress on the Maldives project and the hospital project, which is of Zodiac, and again in the West Bengal road EPC project in Adani. So what are the status on these projects? Because your executed order backlog seems to be lower compared to the order backlog overall. So when can we see the order backlog fully executable?
Execution of Maldives or Adani project, or even Assam, which we have got, or TS4, Punjab project, all this, G-RIDE, all these are starting in Q4.
All this in Q4. Okay. And sir, bank limits, utilized and unutilized portion, fund based on fund based.
Hello.
Yes, sir.
Yeah. Hello. Yeah. So you're asking for banking limits utilized?
Yes, sir. Banking limits, fund based,
almost
non-fund.
Non-fund based almost around 2,000 odd crores, and fund based around 200 crores unutilized. So
total limit would be how much for non-fund based and fund based?
For non-fund based, it would be approximately 4,000 crores.
Okay.
And fund based would be CC limits would be around 350 crores.
Right. I have more questions. I will come back in the queue. Thank you, sir, and all the best.
Right.
Thank you. The next question is from the line of Anupam Gupta from IIFL. Please go ahead.
Thank you, sir, for the opportunity. I just have one question. I wanted to understand the contract between the HAM SPVs and the EPC. So how do you account for the raw material inflation which is there? Where does the inflation get booked, whether in the HAM SPV or where does it get booked in the EPC?
So the escalation which is the estimated escalation above the projected escalation is passed on to the EPC contractor.
Okay, so the HAM overall project cost for the HAM remains the same and EPC margins contract.
Yeah, if it contracts or increases depending on it gets compensated if there is an excess escalation received from NHI vis-a-vis the projected project cost at the time of financial closure.
Okay, but there is no possibility of increasing the debt portion sanctioned from the banks for the higher cost, right? That is not a possibility.
No.
Okay, that's all I want to know. Thank you.
Thank you. The next question is from the line of Parani Vijay from Spark Capital. Please go ahead.
Yeah, good afternoon, sir. Sir, regarding the hybrid projects, there were two concerns, especially when it comes to valuation and the sale of these assets. One was this GST on the annuity payments. I think that is resolved now. Second is this bank rate which reduced, which resulted in the overall IRRs getting impacted. And because we have in our portfolio a lot of projects which we won in the initial 2017-18 period. So how do you see this affecting our ability to monetize these assets going forward, and what is the way out for this?
So there are 2 or 3 assets which were bid where the difference of RBI lending rate was slightly sizable. So definitely it has taken some hit on the valuation of those SPVs. But accordingly, we'll have to take a step and bite the bullet if it is required, or then we'll retain the asset and try to ride the wave of the RBI lending rate. But if we get a good valuation, which is closer to the estimated, because investors also, from a futuristic aspect, they consider a higher RBI lending rate in future. So from that perspective, if they are closer to our initial value expectations, we may monetize that asset too. So that negotiation definitely is going on now.
So essentially, waiting for the interest rates in the economy, going up, would be one of the ways.
Yeah, but it would help in improving the valuation.
Right, correct. Secondly, on the debt that we have outside the EPC business, so you mentioned the BOT portfolio has a debt of 3,156 crores, and the HAM project so far we have about 2,000 crores. So after this SBI Macquarie deal, say in next 1 or 2 quarters, this BOT portfolio debt would be totally out of the consolidated number, correct?
Right.
And you were telling the cash support from the parent to all these assets put together is around 50 crores per year.
Yeah.
Probably this will be for... Yeah, that will also be...
That will also go away.
Yeah, that will also go away, correct. So, so what we would be left with probably in the next year is the 2,000 crores of debt in the HAM, which will of course be increasing as we execute more,
correct.
Right? So what is the nature of debt repayment in these SPVs? Is it a ballooning structure? Is it how is it? Just trying to understand.
It's a ballooning structure because the annuity and the interest has to be serviced over a period of time. So there is a bit of a ballooning structure in the repayment schedule, because if you see the annuity also, the principal amount is ballooning. Similarly, here also it will be ballooning structure over the period.
Yeah. Why I'm asking is whatever cash is required for this HAM projects would be generated by each of the SPVs. You don't foresee any shortfall?
No, we don't. No, we don't foresee any shortfall.
Right, sir. I basically require yearly repayment schedule of these assets, probably for which I will get in touch with you, sir, offline.
Right.
Thank you and all the best.
Yeah. Right. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Sushant Verma, a retail investor. Please go ahead.
Hello, sir. I have been attending your conference calls for the last couple of quarters, and I always see you talking about pretty good about the pipeline and the number of projects, the support from the government, and everything else. And your order book is also pretty good, actually. But somehow I find your performance to be a bit lackluster. I don't see that kind of confidence which I had got about maybe 3 quarters back from the management team. So is there a problem in terms of executing the project, or is it just, the nature of the business right now? I am really worried as an individual investor, sir.
You see, the nature of business is such that the starting of the project is very important, winning and then starting. So there has been a delayed start in most of the projects due to the land acquisition issues and other issues in most of the projects. So if you see, Q4 is very optimistic. Around 6 projects are starting in Q4, which were supposed to start in Q2 and Q3. Particularly, Tumkur-Shivamogga delayed almost by a year on various issues. COVID, HC, and then land acquisition. So this business is all about the entire highway sector business is completely dependent upon land acquisition. Though NHAI always says they would award after 80%, but then getting this 80% actually on ground does take time.
Understood, sir. So that would eventually mean that even Q3 performance may not be great. I mean, if I am to extrapolate that.
Q3 we are having good projects in hand to execute in Q3, like Buildcon, TS3, 2 BR packages, Kandi project. These are all at advanced stage of execution. So they will throw up a good number. But Q4 will be starting of the projects. So execution will start, but numbers will always pick up when projects are really like 6 months down the line.
Okay. Okay. So next question is about the SBI Macquarie's deal. I mean, of course, you have been sharing everything openly in all the calls, but somehow I feel it's a moving target. I mean, I think we thought it would probably get over by Q2. Now it's probably Q4. So, I mean, is there a major struggle in that, or again, it's all to do with the market dynamics right now?
No, basically these are a set of projects where we have annuity, where we have BOT projects, where we have hybrid annuity projects. So evaluation and due diligence of these projects take huge time for the investors. And then there is a process for getting permissions from the authorities. So basically due diligence, because of the nature of projects are varied and the mix is completely from state to NHI, from hybrid to BOT. So the whole evaluation process does take time.
All right, sir. Thank you very much and all the very best. Thank you.
All right.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question again. So, two more questions from my side. One is on the overall strategy of business that I would want to pick your brains on. So, right now we have now ventured in post roads, we have now ventured into railways, power transmission, and now we have got our orders in building segments also. Of course, we used to do buildings before as well. So, as a company level, what are we now looking to actively move, let's say actively diversify beyond the road segment, given the competition that we are seeing in NHI projects and more orders going forward in the next maybe 1 or 2 years, we could expect a larger share of orders as compared to before coming from these non-road segments.
So overall the strategy is, as I explained last time also, it will be 70-30. 70% will always compromise of roads and railways, and 30% would be new sectors like buildings is giving us a very good impetus, and that power T&A is already there. Railway is always a mix of civil or electrical or electromechanical, depending upon which projects we get. But normally the ratio would be like 70-30 for at least next 2 years.
Got it, sir. And sir, in terms of HAM projects, I mean, given that right now we are, let's say, very close to some deal at least, if not a complete portfolio sale, at least some asset sale in the BOT segment. And as you just mentioned that probably HAM asset sale would take a priority later on. And also I think in the market there is a huge supply of HAM projects which other developers also have put up for sale. So any transaction in that space also looks not easy to be materialized. So going forward, would we be open to taking more and more HAM projects in the BOT in the road segment, or will we find a way to reduce the equity requirement burden on our standalone balance sheet?
No, going ahead, we would be definitely bidding for EPC as well as we will be participating in HAM projects. Because anyway, HAM is going to remain as a business strategy going ahead.
Right, sir. So, sir, this is my last question in this thread. So, given that we are looking for, let's say, maybe not a complete BOT portfolio sale, and if, let's say, for example, we end up selling some of the good BOT projects which are generating good cash flows, and let's say maybe Sambalpur or some other projects which are not generating cash flows are not the ones which we are able to sell off, then we might end up in a situation in which our 40 to 50 crores of annual funding requirement, which is the net funding requirement, might actually increase because the positive cash flow from the good assets might no longer be there, and we might actually have to fund the higher loss-making projects from our standalone numbers. So, and then on top of that, we also have the equity requirement of current HAM projects and the future HAM projects as well. So, do you foresee that situation leading us to maybe more incremental debt on our standalone and stress on the balance sheet?
No, we don't envisage that any of the projects which we have put on the block will not sell. So there's always a value and discovery will be there, and we'll be able to sell. So we really don't envisage that any of the projects will be left out in the process. It may be a couple of months plus minus, but otherwise it will definitely happen.
Got it, sir. Got it. Thank you so much for taking my questions and wish you all the best.
Thank you. The next question is from the line of Subhadeep Mitra from JM Financial. Please go ahead.
Hello. Thank you for the opportunity. I'm sorry I joined the call a little late, so my questions might be a repeat of something you've already answered before. My first question is with regard to, what is your guidance with regard to the current year's revenue for the full year for FY22 and the margin guidance? Has there been any change?
So guidance, we had said we will be around 20% is the guidance. Margins will remain in the same region as they are today.
Okay, the same range as what you have done in first half.
Right.
Understood. Secondly, you also had a solar EPC project for NTPC which you were executing. If I remember correctly, I think last time we spoke, what you were mentioning is you were still to procure the modules. So has there been any progress on that in terms of module procurement? Are you looking at any loss in this given that module prices have spiked?
Yes, so there was a sudden spike in the module prices all across, and the entire industry is suffering on that. As an industry, as a whole, we have taken up with NTPC and MRI, and they are trying to find out solution to this particular problem of spike of modules. No purchase order has been placed yet.
Understood. Thanks. That's it from my side.
Thank you. The next question is from the line of Mangesh Badang from Nirmal Bang Equities. Please go ahead.
Hello, sir. Sir, a couple of questions from my side. Sir, so I just wanted to know how much is the subordinate debt as well as the loans and advances that we have given for the assets that we are planning to hive off, and what is the realistic assumption of how much of that will come back to the company, if it's 100%, or you think that there could be lower than that? And second question is, after the deal, how do we expect the capital allocation of the company is going to be? So basically, whether the focus would be on roads and then followed by EPC, or probably something like CGD, or any venture wherein capital commitment is on the higher side would be looked at.
On the subordinate debt, as we have already said, ABL has supported ACL for approximately 950 crores odd, of which approximately 200 crores is interest, so 750 crores in cash. So that is supporting the SPVs through ACL for equity structure, either in the form of equity, pure equity, or debt structure. So that's how it works between ABL, ACL, and the SPVs.
So that money will come back, right? So I'm saying post the deal.
Yeah,
including the interest income, which has not
how
been.
the valuations stack up and what we actually we close the deals.
Okay, and on the capital allocation, sir, so would we be looking at any opportunities in the spaces wherein the capital, say airports or any other space wherein the capital commitment would be there? Or you would be sticking with EPC or maximum HAM?
So major focus will be EPC, but HAM, which is another model of EPC road projects, we'll definitely look at continue to bid for HAM projects, where probably we'll get into structures with long-term equity investment to join hands and fund equity. That will depend in future, but otherwise HAM is definitely an area. Other areas we are typically focusing on pure cash EPC contract.
Okay, sir. Okay. Thanks a lot, sir.
Thank you. As there are no further questions in queue, I now hand the conference over to the management for their closing comments.
Hello, we thank everybody for joining this call, and we are open for any questions and answers offline. You can get in touch with myself or Mr. or our PR agency, Stellar. Thank you and good afternoon.
Thank you, everyone.
Thank you very much. Ladies and gentlemen, on behalf of Nirmal Bang Equities Private Limited, that concludes this conference call for today. Thank you for joining us, and you may now disconnect your lines.